Good morning, dear students.
Good morning, Professor.
Good morning, Professor.
Good morning, Professor.
Today we are going to start new chapter, Introduction of Financial Management. So let me explain that what we are going to be learn after completing this chapter. The first, what is financial management? Definition of financial management, nature or characteristic of financial management, role of financial manager, goal of financial management, legal form of business, and the last will complete the topic with the relationship between the corporation and the financial market. What is financial management? So in any business organization, normally the following managerial functions are found. Production management. Production management is dealing with the product. Product means product quality, product feature. They should be managed, or when the production department is producing the product, they should be considered that the same quality and features they are going to produce what the market need and demand, or customers need and demand. That's why the second important function is marketing management. As you know that nowadays marketing is the biggest tool to sell their product. So that's why we need to know that what marketing management deal. Marketing management deal with the customers. Customer means not only customers, customers mentality, customers psychology, customers attitude. If they knows keenly about what the customer want, they are going to be market their product according to, and it is more easily acceptable by the customers. Third, this is also very important function in any organization, that is a human resource management. Human resource management is deal with the manpower or human beings, those are working in the organization, what is their need, what's their want, what's their expertise, and even though what is the recruitment process, what is the selection process, how we are going to be use our manpower to give take maximum output from them. So these all features are managed by the human resource department. The fourth is not ignorable department in any organization or function of any organization, that is a financial management. Financial management deal with only funds. Fund is very important for organization. If I am going back again for everything, like production manager, he want to produce a good quality product, but good quality product need fund. So fund should be released by the financial manager. Understand? Marketing management. Marketing manager have a very good idea to introduce their product or sell in the product in the market, but they need a fund. They need the money to spend on the marketing activities. So this fund will be come through the financial manager. It means from the fund. They are managing the fund. Human resource management is also when they are recruiting, they are giving training, they are giving any benefit to their employees, they are looking towards financial management. So we can say that financial management play a very key role in any organization to manage all financial activities. So that's why the responsibility of financial manager is higher than the others. They definitely both all are equal contributing for the organization, but financial manager is responsible for all functions to manage accordingly. So we can say in conclusion, financial management is that specialized branch of management which deal with the management of funds to manage whole organization. So let me explain more about the fund. Financial management, actually, the term fund include money plus anything, either tangible or intangible, which has economic or exchange value. What is the meaning of economic value or exchange value? The meaning is that if you are having anything and you want to replace with the money, you can replace easily. Or if you are having any one product and you want to exchange the market from the other product, it is very easy. As you know that in ancient time, when we are not having the note or the money, we are exchanging goods against the goods. It means if you are having rice and the other one having oil, so you can exchange as per the quantity discussion. Same here, we are talking that in any organization, if they are having any valuable thing and they are exchanging, so it will become under the head of fund. For example, normally in all organization we are having cash in hand, cash at bank. The cash is directly denoted to the money, so we can say that this is a part of fund as well. Inventory also, because the goods what you purchase for creating the goods are for selling purpose. These goods are your assets because you are planning to sell it, and once you will sell it, you will get the cash back. Debtors, receivables. Debtors means receivables, are some persons are writing. Normally accounting we are using the word debtors, and in finance we are using the word receivables, but nowadays it is very common to use receivable. So let us see receivables. As you are aware, because you studied already many accounting courses before, things means the goods what you sold on credit basis and waiting to receive the money from the customer, it is known as receivables. So it means it is also coming in a money form. It is easily understandable that this is also a part of fund. Land and building. You know that if you are having your land, your building, you can easily convert into the cash, and once you will convert, it will be your fund. And machineries, equipment, etc. all are fund. Financial management basically related to three aspects of fund. The one, supply of additional fund. The two, investment of available fund. Three, distribution of profit. These three is, we can say that, a pillar of financial management. Financial management cannot be deal with any fund if they don't have these three full understanding of vision. So this three particular part is very important for any financial manager to understand in proper way. Now we'll go for the definition of financial management. I will bring here two definitions. Normally we are telling about the all subjects are art and science. Art means how we are presenting. Science means what techniques are behind it, what understanding of behind it. So I will present two definitions with both way, as an art, as an science. So let us see, the first one is the financial management as an art, or we say that it is a management function as well. So financial management is the process or art of raising, investing of funds and distribution of dividend in such a way the objective of firms are achieved. Look, three functions we discussed, that three functions we again put here. The first function is investment decision, second is financing decision, and the third is dividend decision. It means from where we will get the fund, where we will invest the fund, and how we will distribute if fund will generate more profit or more money in market. This is an art. Same as we can discuss as science. We can say that financial management is that branch of knowledge which deal with the principle of techniques of raising funds for the company, making investment of funds and distribution of dividend. Look, in the science again, but here we are using technically. What technically? We are telling that what is ability, like as a financial management you have ability to increase the fund from the market, or to get the money, to borrow the money, or to find the investors as a owner from the market. So this is a function of financial management. When you will get, you know that the vision is before you, that where you are going to be invest. It means what type of product you are going to be purchase or produce to sell in the market, for the understanding that to get more profit, to get the extra profit on that sale. That extra profit is your profit. So once you will get the extra money, it is your profit. That how you are going to be distribute this profit among the persons those are giving you money. It means from where you are getting the money, from where you raise the money in your organization. So this is the definition, two definitions. Now we'll discuss about the nature of or characteristics of financial management. As I discussed with you, the financial management is both art and science, and you are aware with this. Its core is to manage fund. It means financial manager cannot be interfere in production, cannot be interfere in marketing activity, cannot be interfere in manpower or recruitment activities. But they are dealing with the fund. They are having checked that when you are going to be produce any product, what money is required, how much money is required. They will release the fund as per the availability. Even though if you are going for marketing activity, whatever marketing you require, you need to prepare a budget and get the permission from the financial manager. Same as human resource department should be prepare a budget that what recruitment process would be and how much money they are going to be spent on human beings, on manpower, get a permission or a particular information from the financial management. That's why we are telling that financial manager is always in superiority basis, because they are going to be decide that whether they are releasing the fund against their activities or not. So that's why financial manager have more power than others, and it was normally dealing by the top management. As we discussed already, there are three main financial functions. These are supply of fund, investment decisions, or we can say that dividend decision, means distribution dividend, as we discussed. Fourth, it is both theoretical as well as practical. Theoretical, when we are giving any method, any process, it is theoretical. And once we are giving the calculations, it is in numerical way. So we can say that numerical. So financial management deal with both type of aspects, methodological also and practical also. Financial management exists in all type of business organization, either big or small, doesn't matter. In a small, even if you are going to start a small coffee shop, for example, you need money, you need fund, and you know to know that how much you are going to be spent on hiring or renting a shop, how much you are going to be spent to purchase a machinery or equipment like coffee machine and others. And if you are going to be know that what you are going to be spent for marketing in a small way, but in a small business also, fund is required. It is compulsory part of financial management. And big, you already knows that we discussed many times and we'll discuss further more. Normally it is handled by the top management. I have already told you that who's the owner or maybe CEOs. Top management should be decide that how much fund we are going to be spent over there or in which particular area. So that's why it is known as top management function, or financial management is known as top management function. Its scope is always growing mode. Financial expectation of the organization is always increasing. You started your business with some money, money is growing and your business is also growing. So the requirement of when business is growing, the requirement of business is increasing. So it means you need to grow always your fund in your organization. Here it is also very important to know the role of financial manager. Financial management provide lifeblood, that is fund, or we can say the capital because we received from the owner, to the other functions area. So we'll discuss what are the other function area, but before discussing that, I will say that I use the word here lifeblood. What is the meaning of lifeblood? We know that we are the human being and we are surviving till blood is circulating in our body. Same as if blood is going to be stopped in our body, we cannot be survived. Same as if money is not circulating in the business, business cannot be survived. So that's why we are comparing the lifeblood with the fund. Now we'll state some of these are as follows. Financial planning. What is required in financial planning? First, we will discuss about the setting of financial objectives, preparation of financial plan to test adequacy of fund for plans suggested by the production and marketing department. As I already explained to you, whatever plan they will set, they have to be asked to the financial manager, and then only financial manager will be approved. The next, procurement of fund. Procurement means how we are keeping the fund, where we are keeping the fund. It is very important function for financial management. Raising of funds of short term and long term at right time from right sources at the lowest cost. You know that when we need a fund, sometimes we need for short term uses. in business organization, we are paying sometimes salaries, we are meting out sometimes short-term liabilities, and we know that after that fund will become. So if we cannot be take the long-term loans from the market, otherwise it is a burden on the organization. This should be decided by the financial manager, and it is also very important role of financial manager. This will be include raising working capital loan from the bank. It means working capital means day-to-day activity. I will come with a chapter in future. I will explain to you also. Be understood at that time. Keep these things in your mind. This will also include issue of share and debenture or debt. We can issue the shares, means increase the owners in the business, or we can get the debt from the market as a debenture as well. Next, financial administration. It means control of fund. Greeting various departments like accounting department, auditing department, tax management department, cash collections, cash payment, etc. This is the work of financial manager. So it means financial manager is also working as a administration. So they are controlling the liquidity. Liquidity means how much cash or how much money they require to manage their short-term needs, or we can say that before also working capital needs. This is also a part of financial management. Inventory and other assets control is also part of financial manager or management. Goal of financial management. The first, profit maximization. In profit maximization, it's based on the timing of return. It means how much return will come and when it will become. So this is related to the timing. The second thing is that uncertainty of return, because nobody knows that when and how much profit will become in the organization. So the first goal of profit maximization of financial manager. The second goal they are having shareholders wealth maximization. When shareholders are investing, they are thinking to increase their wealth, not only the profit. And it will be maximize the firm value. How they will get to know that their wealth is increasing? It means if you started your venture, your organization, your fund with some money, and after some period, after a particular time when you will assess, you will get to know that the value of your organization is increased. So it means they need a maximum value. The second thing is that maximizing the stock price or share price in the market. We are very much aware nowadays in the market, different countries are having different their market, like Muscat having Muscat security market, India having the Bombay Stock Exchange, America, New York Stock Exchange, so etc. So many organizations are having their own stock exchange. Even you are listing your companies with such price, and because of market need or demand and supply, your prices are increasing and decreasing. It is coming on the share market, or it is coming on the indexing as well. I will explain you in a later classes. So here shareholders want to increase the share price also in the market. Shareholders, first we will discuss about the shareholders wealth maximization to understand more about it. Maximization of shareholders wealth means maximizing of total market value of the firm's common stock. Common stock means equities capital. Equity capital means owner's capital. We can say that this is the ownership capital. When we are talking about the common stock, it means the money or the fund given by the owner to the organization. It is reflecting in that. The second thing is that to understand the goal and the important necessary to first understand the difficulties involved with the commonly recommended goal of profit maximization. As we told that the first goal is profit maximization. So why we are choosing wealth maximization? Because of some complexities are there in profit maximization, timing issue, uncertainty. So that's why shareholders are not considering about the profit maximization. So in next slide, we'll discuss about that. Meaning of profit maximization. Profit maximization refer to maximizing dollar income, or we can say that money income of the firms. According to this goal, the action that increase profit should be undertaken and those that decrease profit are to be avoided. So here we are telling that whatever events, whatever things we are discussing in the organization and we think that it will be effect to increase the profit, we should be do it. And if we think that if any activity in the organization we would be reduce our profit, we should be avoid it. This is the one. Profit maximization. The goal of profit maximization is sustains the efficient use of capital resources. It's assume away many of the complexities of the real world, and for this reason it is unacceptable. We have so many states when we are considering about the profit and it is not certain. So that's why mostly we are not considering only about the profit maximization as a financial manager. In daily life, normally we are looking only for the profit, you knows it. The reason first. One of the major criticism on profit maximization is that it's assume away uncertainty of return. As I told you that we cannot be say that after some days, after 1 year, after 1 month, we will get this much of return. It's not fixed. It's depend upon the customers need, market needs, whatever products, whatever goods you will sell and whatever rotation would be, accordingly you will earn the profit. That is, projects are compared by examining their expected value or weighted average profit. Weighted average profit means how much products are worth the profit. It is a multiplication. I will come back this weighted average method in a cost of capital and working capital and we'll discuss these chapter. You will get to know that more. If you want, you can see that slides or that video. You will get everything. Profit maximization is also criticized because it's assume away timing difference of return. So first is uncertainty of return, second is timing difference. It means last year I got 10,000 profit. This year definitely I will get 10. No, this is not right way. You cannot be saying this way. Last year the circumstances, the situations give you some profit. This year the circumstances and situation is different. So accordingly the situations you may earn high profit or maybe low profit, but you don't have particular timing values that this time I got this profit, so I will definitely. Last year in the month of November I got this profit, so this year also I will get. No, this is not the right way to deal with the profit maximization. Conclusion, profit maximization is unacceptable because of these two reasons, important two reasons. Many other reasons are there. And the more realistic goal is needed. So when we come for the conclusion, we need something else is required because profit is difficult to control by the financial manager. Then what is that? What is the second? We can say that it is a wealth maximization. Wealth maximization is the concept of increasing the value of the business in order to increase the value of share held by the stockholders. Stockholders, sometimes we are using different word. Shareholder, stockholder. So they are having same meaning. We are reflecting to the owners, those are investing money in the business organization. This is a definition of stockholders or shareholders. The most direct evidence of wealth maximization is changing in the price of company's share. As I discussed with you before, when the price of share is increasing or decreasing in the market, it is reflecting whether the wealth is increasing or decreasing. So, how to maximize the value or wealth of shareholders? So, maximization of wealth, we can say that we have chosen the goal of shareholders' wealth maximization because the effect of all functions decisions are included in this goal, not only to the timing and return. Many are here. Each decision is going to be affect whether product decision, manpower decision, or marketing decision, including the fund decision. So every decision is going to be reflect on your wealth. So that's why it is more wideable and more acceptable. In order to be employ this goal, we need not consider every price change to be a market interpretation of the worth of our decision. Now, after discussing the wealth, profit maximization and wealth maximization, we will go for a small discussion that what type of business organizations or legal form of business organizations are available. So we'll go one by one. Legal form of the business organization. Number one, sole proprietorship. It is also known as individual business. Normally, you are very much aware in the market, as we told, that a small business or big business. Sole proprietorship is always a small business. Let me explain the definition first, then we'll come back to you. A business owned by a single person that has a minimum amount of legal structure. It means in a small structure, you can start your business, that is known as sole proprietorship business. What are the advantages of sole proprietorship business? It is easily established with few complexities. It's like registration, finding a shop, putting that signboard, etc. Not much. Minimal organization cost. You no need to appoint that financial manager, marketing manager, others. A one single person can deal with everything. Understand? Does not have to share the profit or control with others. This is the most important thing, is that when we are running any business with our idea, we don't want to share our profit. So here also the same. If you are having your idea, you started your business, whatever you are earning, it is your own. So you can keep all profit with you. You cannot be shared with the others. In continuation, we can say that disadvantages as well. Number one, unlimited liability for the owners, because you are himself responsible for your business. So if any loss, you must be ready to bear. Unlimited means if you took big loan or some money from the market or from individuals, you should pay from your home. If it is not only to depend only on your business. So that's why it is known as unlimited liability. Hope you understand with this example. Owners must absorb all losses. It means no one is going to share your loss. You should be shared by yourself. Equity capital limited to the owner's personal investment. This is the biggest drawback in sole proprietorship business. If you have chances to increase your business, you find that you are running a small business, but it is very good business and you want to grow in the market. Otherwise, other competitor will become and they will start the same business. But unfortunately, you are not having much money to start. So that's why this is the biggest drawback or disadvantage of sole proprietorship business. Business terminates immediately upon the death of owner. Unfortunately, if one person is running the business, he knows everything regarding his business, no one else. So if something happened wrong with him, the business will be closed. No one else can be run the business or in the same way what the person is running, if the family members even though will join, but not no one else. The second, when we are coming for a legal form of the business, normally we are telling about the partnership. Partnership means an association of two or more individuals coming together as a co-owner to operate a business for profit. Here not single, compulsory minimum two or more than two should be required for any type of partnership. Normally we are discussing or we are telling there are two type of partnership. Here when we are coming for two type of partnership, one is known as general partnership, second is limited partnership. What is general partnership? General partnership is relationship between the partners is directed by the partnership agreement. It means we must be having a written agreement. In that agreement, everything is written that which partner have what capacity. It means different partner have a different capacity. For more understanding, they can invest different amount of money or different efficiency. Like one person is technically very sound, another person is financially very sound. They can join together for their business. Technical person will help to run the business, and the financial resources man, he has to be give his resources to help, and then they will decide that what type of profit they will share in future. So this should be a written agreement compulsory. Advantages for the partnership: minimal organization requirement. Also like a sole proprietorship, it is also required a minimal organization structure. Maybe with 1, 2, 3 persons, they can start their business. Not much big business organizations required, big managers are required, like other big business like corporation. I will later on discuss with you. Negligible government regulations. Normally, as sole proprietorship, same rules normally government is imposing on the partnerships as well. This is also the same. Disadvantages of general partnership: all partners have unlimited liability. This is the biggest draw, or we can say that this is the biggest disadvantage, that if something happened wrong in the business, the person whose money involved, or the person who gives the loan, or the bank who gives the loan, they can recover their loan from any partner. If X is not able to pay, they will go to the Y. Whatever partners are there, they should be paid from their house, not only from the business. This is the disadvantage of general partnership. Difficult to raise large amount of capital. Whatever money they are having, they can invest in the business, but it is risky because they don't want to increase any other partner, even though if business requirement is there, because they want to share the profit. They don't want. Understand? So in this way, it is difficult to raise the capital. Partnership dissolved by the death or withdrawal of general partner. You know that in this partnership, one person should be a key person. If he is no more, or he don't want to run this business with this partnership, he want to cancel it. Once he will be cancelled, the other partner cannot be continue the business, other partners cannot be continue the business, because the technical person, the important person, is leaving the business. So this is the disadvantage of general partnership. Now the second is limited partnership. We'll go directly for the advantage. The same partnership is required here too, and two more persons will be come together for their same goal, and they can start their business, but without writing any agreement directly. So the advantage of limited partnership: for the limited partner, liability limited to the amount of capital invested in the company. Here also, if you are going for a limited partnership, those partners are limited. But here, keep in your mind, one partner must be a general partner here as well. He has to be take all responsibility. But the other partner, those are just limited. They give their money or something else or the idea, and they are not involving in the working decisions. Sometimes they are telling that we are limited partners. If you need money, you have a very good idea, you can run the business. Suppose Mr. X, he said that I have very brilliant idea, I want to discuss with you. If you give money, I can start the business and it will be good profitable for you. Suppose I am the small person and you are the person, so that I have some money, okay, I'll give to you, you can start, but I don't want any liability. Whatever money I am giving to you, I am ready to take the risk for that money. If something happened wrong, okay, I will sacrifice, but not more than this. So this type is limited partner. I hope you understand the limited partners roles. Anything you can again ask me on that after completion of this video. Whatever questions are there, you can write to me. I will explain. Withdrawal or death of limited partner does not affect the continuity of the business. This is also advantage. If you saw that previous both we are having, this is a flaw. This is the disadvantage, but here it is not a disadvantage. We cannot be say advantage, but not a disadvantage, because if X1 is giving the money and he died, limited partner died, why selling that? Oh, your business is running very good. Okay, you need money, I will give to you. Doesn't matter. So this will be transferred to X to Y, but business will not be affected until unless general partner will not be affected with this problem. Stronger inducements in raising capital. Here also, because partnership is limited, so we can ask that this business is growing. If you want to increase more money, definitely you will get the more return. If you say that no, I don't have more money, I cannot pay. So what you will do, you can ask to the fourth person or third person or fifth person that if they will give, because your business is already running business, and you can decide with them what profit you are going to be share, they may give the money. So it means little bit easy to raise the funds to invest in your business. This is the advantage of limited partnership. Same as they are having disadvantage as well. The first, there must be at least one general partner who has unlimited liability in the partnership. As I told you that all partners cannot be limited partner, then who will take the business responsibility? One partner or maybe main person who brought the idea, who is running the business, who's taking all decision must be take the responsibility as a general partner. So in limited partnership also one partner is general partner, and this is a disadvantage. That person is going to be face all problems. Names of limited partners may not be appear in the name of the firm because an individual person he is starting even though with the partnership, but it is just like a sole proprietorship business. He is managing by himself. So he will not disclose that Mr. X give, Mr. Y give the money. It doesn't matter because it's a personal understanding. We are running organization on partnership, but I will share the money, whatever requirement. So names, if any partner want to show their names, no, they will not get the name. This is a disadvantage. That's why they are hesitating to invest more money in the business. Limited partners may not participate in the management of the business. May not means sometime they can if they have agreement with the general partner, but they have to take some responsibility as well in this way. More expensive to organize than general partnership. More organization is when we are comparing about the general and limited, then we can say that limited partnership is little bit expensive than general partnership, as a written agreement is mandatory. Okay. Legal form of the business and other things. The third, limited liability companies. It is also known as LLCs. Cross between a partnership and corporation. After that, we will discuss about the corporation, but they have both features in limited liability companies. They are working as a corporation, but they have some features as a partnership because they are limited. They are limited with the numbers. Owners have limited liability, but the firms run and is taxed like a partnership. Corporation. This is a very important. Corporations are an impersonal legal entities having the power to purchase, sell, or own assets and to incur liabilities while existing separately and apart from its owners. First, I will explain you a little bit corporation. Corporations are as impersonal. Impersonal activity. What the meaning of impersonal activity means? They can run by individual. It is not related to any human being. Definitely the human beings are running the corporation, keep in your mind, but corporation have separate, like suppose I will give one example to you. If you are going to buy any company's phone, suppose I will ask that what phone you are using, you say that Apple phone. Apple is the name of person? No, it is name of company. If something happened wrong with your phone, you are going to be sue against it. And when you are suing, to whom you are suing? You are suing to the company. You will register the case against the Apple company, or you are going to be register the case. This is an example as a particular company. So it means you are dealing with the company. A company can sue also if you are misusing that particular product. So it means here the second party is a company if you are having any agreement. So we can say that in corporation we are dealing that corporation as a entity, as a single individual person. So that person, why we are telling the personal? Because what the person is doing in daily life, what you and me are doing, we are just in business, we are dealing, we are selling our product, we are purchasing the product, we are having some responsibilities or liabilities, we are having some assets. The same corporations are having. So that's why we say that corporations are not a natural person, but a person. Hope understand? Not? Then again, go to the inbox, write the message, you will get your answer or more explanation. Or you can, at the end of the video, you will get my email ID. You can write on my email, either in text box, you will get the better answers, or you will get the answers, whatever your questions maybe in your mind. Carry on. Advantage of corporations. First, limited liability of the owners. Easy of transferable of ownership. That means you can say that by the sale of one's shares or stock to the other one. The death of owners does not result in the discontinuity of the firm's life. It's not going to be affect. Ability to raise large amount of capital is increased. Disadvantages. Most difficult and expensive form of the business to establish. We need a huge amount of registration or listing in the any security market to raise the funds. Control of corporation not guaranteed by the partial ownership of stock. Now we'll discuss about the relationship between the corporations and the financial market. The popularity of corporation stem from the easy to raise capital that is provides. Initially, the corporations raise fund in the financial market by selling securities. The corporation then invest this cash in return generating assets like in trading activities or manufacturing activities. Trading means they are buying a product and selling it back on the high rate, on the different rate. The excess cash between the purchasing and selling is their profit. So this is a profit process of the business. Same as in manufacturing, they are purchasing raw material, they are putting their manpower input, marketing input, and they are creating one new product, or you can say finished goods. Then that product they are selling in the market above the cost what they incur on that. It is also their profit. This is their return, the cash return on that. The cash flow from those assets is either reinvested in the corporation when give back the investors in the form of dividend or invest, or we can say that reinvest payment, are used to repurchase stock, which should cause the stock price to raise, are given to the government in the form of taxes. So let's go with this figure. You can get more understanding with the arrows mentioned over here, the relationship between the corporations and a financial market. So see the big building, it is representing the corporations, and the other side, that is a blue chart, it is showing that investors. And even though investors, so one circle of arrows are there, it is known as secondary market. I will explain that what is the secondary market later on. First, the corporation. The thing is there, if you see that investors are giving cash on the first arrow to the corporations. Investors, either individual investors or shareholders, or maybe this cash is coming from the banks or from the debts as well. And what the corporations are giving as a guarantee to them, it is called securities. Securities, we are telling that either the stock or the bonds. So it means investors are buying securities from the corporation in this way. So these two first arrows are showing, are reflecting it. The third arrow, it is coming from the corporations to again to the investors. It is with the three different dimension. The direct dimension is showing that dividend payment. It means at the end of the year, corporations are paying dividend to their investors. Dividend means part of profit. We have full chapter and video on dividend policy in my blog. Just go on my channel. You will get the full information regarding the dividend policies and procedure. You will get everything. Now, second thing is there, if you go up arrow, it is showing that reinvest. Some of the profit, because of growth of the companies are reinvesting by themselves. So they are not distributing all profit as a dividend, or sometimes they are not distributing even the profit of as a dividend. All profit they are reinvesting. Again, it is available on my videos on dividend decisions. The next is cash flow. It is going to the government as a taxes. Government is providing facilities to the corporations in their organization in their countries. So each government is liable to collect the money or take some money from the corporations those are generating in the country as a taxes. So it means it is going to the government as well. So this is a full flow chart between the relationship of corporations and the investor as well as government. Here investor, I told you that we are having one circle. It is mentioned the secondary market. Normally, when corporations are issuing the security to the investor, investors investing their cash in the corporations. But the second thing is that if investor want money back, but corporations have an agreement that they give the money up to a certain period, but they need money in between because of some requirement. So there are an option to they can purchase and sell the security from the secondary market. It means investor to investors. This we will discuss in later videos. I'll explain to you where it will become. We'll discuss later on. As I told you that the way of secondary market or primary market. So I will explain in just a small way. And again, I'm telling that after completing this video, if you are having any questions, you must be right on my YouTube channel. So you will get the answers from my side. I hope so as early as possible. I will give you answers. Primary market. Market in which new issue of a security are sold to initial buyers. It means directly from corporations to investor. Secondary market. Market in which previously issued securities are traded. Means sale. Trading means sale and purchase. As I told you in previous slide that in that arrow it is showing that secondary market. Secondary market means as an investor, if you are having any security of any company, you can sell to any other person, not to the company. This selling and purchasing in the market within the investor is known as secondary market trading. Other than these two, we are having initial public offering. It is known as IPOs. It is very common language. If you are trading with the share or securities, you are very much aware. The first time the firm's stock is sold to the general public. Normally, companies are telling that we are going to starting the IPOs like Reliance, like other companies, or Armaco. Many companies they are telling that we are going to be IPO on this day. So it means they are telling that we are going to be sell our share on this particular date, first time to the public. Seasoned new issue. A new stock offering by a firm that already has stock that is traded in the secondary market. In my video before, we discussed that company have a repurchase also sometimes stocks. It means that stock already sold but repurchased and companies are having. So some stock that company already sold but now companies are having, company can resell it. So it is known seasoned new stock. As per the requirement of fund, they are selling time to time. So this is a seasoned stock shares. Here, this is the last slide in this video. We are going to be discuss the principles of financial management. Where we are having 10 principles and whole financial management is based on the 10 principles. So once we will come for the other videos or other chapters, you will get to know that one by one all principles. I'm not going to be explain these principles here, just for the information and conclusion of the financial management introductory chapter. I will just give that 10 principle. Number one, risk return trade-off. This is a very important principle of financial management. Financial management is always dealing with the risk return trade-off. Time value of money. Even though in the same chapter next video I will going to be delivered to you with the time value of money, and it is also in a numerical way. It is not only on theoretical just like this video. We will get some examples and that examples will be give you more clear picture about that money circulation. Cash not profit is a king. Incremental cash flows should count. The course of competitive market, efficient capital market, the agency problem, taxes-based business decisions, all risk is not equal, and ethical dilemmas are everywhere in the firm. So these are particular things what we are going to be discuss. With this last slide, I'm going to be complete my video. And the same thing what I'm telling always, don't forget to subscribe my channel, these videos, so you will get the further videos first in your hand. Better to subscribe now. After completing or closing this tab, go and subscribe it and ready for the new videos. The next videos are coming in a very interesting way. Okay, so again, the same thing is there. My email ID is there. Other things are there. You can go over there. And my suggestion is better to, if you have any questions, write on the same suggestion box and you will get your answer as soon as possible. Thank you very much being with me.